is ACC Amit Kumar, and I'll discuss IFRS 6 exploration for and evolution of mineral resources. IFRS 6 exploration for and evaluation of mineral resources. So this is a facility standard for the time being. There's no yet developed standard for the mining industry, and IAS 38 was not capable of giving clarity on when they can capitalize the cost they're incurring on exploration and evaluation activities. So if you remember IAS 38 intangible assets, we had research phase, and then it reached development phase. All the expenditures being incurred in the research phase was being expensed off, and the expenditures being incurred in development phase is capitalized. The mining industry was confused into determining the development phase, and if they do not capitalize the amount they are spending on exploration activity, all the money goes into research phase, and their exploratory activities were of higher value. So they needed something in advance, like they wanted to extend this development phase and wanted recognition earlier than meeting all the criteria of intangible assets. So for them, IFRS 6 is a facility given to them that they can capitalize the expenditure they're incurring the moment they get the right to explore. The moment they get the right to explore, they are eligible to capitalize the cost incurred thereafter. The trigger point is not the criteria of IAS 38 intangible assets. Is the reason IFRS 6 was introduced, just to allow capitalization earlier than meeting all the development stage criteria. So this standard is coming in between research and development. IFRS 6 is giving us a new date that from this date you can capitalize all the expenditures you're incurring, and the date, the trigger point is the right to explore. After you get the right to explore, you can capitalize all the costs incurred thereafter. So this is the standard actually, that the moment you get the right to explore, you are eligible for capitalization. So this is a facility for the time being. Maybe in future we'll get a new standard on mining industry, since ISB cannot develop standards specifically for industries or industry specific for any particular industry. They introduce for general standards, and for issues they give amendments or guidances. Maybe when they get time, after they're done with the majority of issues they are yet to resolve relating to IFRS 17, they just introduced on insurance contracts. This was specifically for this industry. In future we may see something for mining industry as well. So we'll understand the scope of IFRS 6, the key definitions, accounting policies to be adopted, measurement, impairment. The reasons for issuing IFRS 6. It addresses the financial reporting for the exploration for and evaluation of mineral resources, including minerals, oil, natural gas, and similar non-regenerative resources. So it identifies expenditure to be included in and excluded from exploration and evaluation assets. We are required to capitalize that asset, exploration and evaluation asset. So when can we capitalize that is being answered through this standard. It provides an exemption for exploration and evaluation assets from part of the hierarchy in IAS 8, accounting policies, changes in accounting estimates and errors. Requires an entity that recognizes exploration and evaluation assets to assess such assets for impairment in accordance with IFRS 6 and measure such assets for impairment as per IAS. Measure such assets according to IAS 36 means we'll compare the carrying amount with the recoverable amount. We'll take the principles of IAS 36, but it is being done through this standard only. The guidelines apply to it, but only through IFRS 6, but we can take the principle of comparing carrying amount with recoverable amount. The hierarchy followed means that we'll not be using the same principles which we did for IAS 38. We can follow the guidelines of IFRS 6, since this is introduced specially for exploration and evaluation activities. Required disclosures. whatever we've done, how we did it, at what trigger point we started capitalizing, we need to disclose. It applies to expenditures incurred in the exploration and evaluation of mineral resources. Now, these expenditures, are they eligible for capitalizations? We record them as exploration and evaluation of assets, E&E assets they are known as. So it does not apply to expenditures incurred before an entity has obtained the legal right to explore a specific area. Pre-acquisition or pre-exploration expenditures are part of P&L, but after the technical feasibility and commercial viability of extracting a mineral resource are demonstrable, then they reach the development phase. So there was a period when they got the right to explore, but it did not meet all the criteria of IS 38 intangible assets. So they were given this exemption that they can capitalize E&E assets from the date they get the right to explore. Exploration and evaluation expenditures are incurred by an entity in connection with the exploration for and evaluation of mineral resources before the technical feasibility and commercial viability. So there are expenditures being incurred before they meet this criteria of IS 38 intangible assets, but they wish to capitalize them even before it. So for them, the right to explore is the trigger point for capitalizing E&E expenditures. Mineral resources include mineral oils, gas, similar non-regenerative resources. The research for mineral resources after the entity has obtained legal rights to explore in specific area, as well as determination of technical feasibility. So the moment they get a right to explore, they know that it is technically demonstrable that they will be getting these resources here. So the moment they get a right to explore, in how much quantity it is going to happen, what is the total quantum, they are not yet sure of. But the moment they get to know the quantity, it gets converted into a tangible or intangible asset later on. But till the time they're incurring expenditures that is governed by IFRS 6, they capitalize that asset. And the moment the quantity or how much they're going to get, the technical feasibility, commercial viability is known, the asset gets transferred to either IS 38 or IS 16 property, plant and equipment, depending on what they have got. Exploration evaluation expenditures that are recognized as assets in accordance with entities accounting policy under IFRS 6, but such assets are scoped out of IS 16 and 38 till the time they are being capitalized, till the time it is not sure. So E&E assets are covered under IFRS 6. The two common accounting methods in the oil and gas industry are the full cost method and successful efforts method. Full cost method means all costs incurred in acquiring, exploring, developing within a broadly defined cost center are capitalized and amortized. Under this method, costs are capitalized even if a specific project in the cost center was a failure. So the moment they get the right to explore, they are eligible for capitalization. If they're not able to recover all that amount, it gets impaired. Successful efforts method, many costs are capitalized and amortized, unlike the full cost method. However, costs of unsuccessful acquisition and exploration activities are charged to P&L. Costs whose outcome is unknown are either expensed or capitalized depending on what is their stage. So IFRS 6 does not contain recognition requirements for exploration and evaluation assets. So an entity needs to develop its own accounting policy for recognition of such assets. As I said, after they have got the quantum, then we refer to other standards. An entity is permitted to change accounting policy for exploration and evaluation expenditures only if change makes the financial statements more reliant and relevant. In IFRS, a change in accounting policy is only allowed when it gives fair representation, and if you're able to demonstrate that fair representation, we can change the policy from one method to another. At recognition, E&E assets must be measured at cost. Whatever we have incurred is required to determine a policy that specifies which expenditures are recognized as part of cost of evaluation assets. So we need to identify whether which are expensed and which are capitalized. So examples of expenditures can be recognized as an asset. Entity might incur in the initial measurement of exploration, like acquisition of rights to explore. The moment they get the right to explore, after that point they can capitalize. But any pre-exploration activity expenditure is not eligible for capitalization. So these can be eligible for capitalization: acquisition of rights to explore, topographical, geological, geochemical, and geophysical studies, exploratory drilling, trenching, sampling, activities in relation to evaluating the technical feasibility and commercial viability of extracting a mineral resource. In some cases, general and admin and overhead costs directly attributable to exploration activity may also qualify for recognition. If they do not qualify, they are expensed off. Relating to development of mineral resources, before the actual process of exploration for evaluation of mineral resources, the point before they get the right to explore are expensed. After technical feasibility and commercial viability is demonstrable, after that it is measured under IAS 38 or IAS 16 for the development of mineral resource. So an entity classifies an E&E asset as either tangible or intangible asset according to the nature of the asset. Whether E&E is a tangible or E&E is an intangible. How will following be classified? Vehicles or drilling rigs? The vehicles being used on exploration activity will be forming part of IAS 16, the drilling rigs. So the equipment which is being used for exploration activity will continue to form part of IAS 16 property, plant and equipment. Diamond Diggers Company is a mining company currently exploring and evaluating the possibilities for extracting diamonds from deserts of Thar. The following costs were incurred in the year 2018. Legal expenses relating to acquisition of land in which exploration is to take place. Legal expenses relating to acquisition of right to explore, exploratory drilling costs, general admin overheads allocated to exploration of land, cost of extracting diamonds. Which of the above costs may be captured as exploration evaluation assets in accordance with IFRS 6? The day they get the right to explore. That is legal expenses related to acquisition of right to explore. Acquisition of land is not an exploration activity. So the following costs can be capitalized: legal expenses cost and exploratory drilling. These cannot be capitalized: legal expenses relating to acquisition of land, general overheads allocated to exploration of land, because land is not included. So any admin expenses relating to land are also not included as part of, and cost of extracting diamonds. So since cost of extracting diamonds falls into the category of IAS 16, they are not covered under IFRS 6. So not considered as E&E asset, that will be considered as a separate tangible asset, depending on its probability of how much quantity of diamonds we will be getting from it. So from the date of right to explore till the technical feasibility, commercial viability is demonstrated, it is IFRS 6. After technical feasibility, commercial viability is known, it is either IAS 16 or IAS 38. This area, development phase, when it completes, even in intangible assets which are in the development phase, after they are completed, they are recorded as intangible assets. Until then, they are R&D expenditures. So after recognition, entity applies one or two models for E&E assets. Either they are tangible, intangible, depending on, they can choose whether, if it is tangible, intangible, both the models, cost model, evaluation model, they can apply any of them. So they're classified as tangible, measured under 16. If they're classified as intangible, measured under IAS 38. For IAS 38, revaluation model is very rare, only if an active market exists. Entity may be required by law to restore the evacuation site to its former condition after the mine expires. Such cases, amount to be spent on restoration of site must also be recognized as a liability, as a provision, as soon as exploration and evacuation work begins. So this also has a relationship with the decommissioning costs, which were part of IAS 16 property, plant and equipment. If there's any restoration required, dismantling, decommissioning, restoration is required. So whatever is the cost which we have to incur in future, we calculate the present value of that liability. Suppose there's an asset worth 500,000 and restoration, we need to spend 200,000 after 3 years. So the present value of liability today will be recorded and also added to the cost of the asset. So this will be, asset will be 5 lakh plus the present value of 2 lakh. Suppose 10% is the rate, and the present value for a 3-year period is 1 divided by 0.7513. So 2 lakh present value in today's terms will be 150263. This will be the total value of the asset to be recorded in the books. The asset will be recorded at 650623. At the same time, there is a liability recorded in today's terms that is equal to 150263. Now, whatever we discount to present value in IFRS, we are also required to unwind the discount at the end of each year. We also need to review if there is any change in this cost, whether it has increased or decreased. This liability may change, and this asset value may also change because of it. Same principle which we applied in IAS 16 PPE will be applied to E&E assets recorded as IAS 16 or 38. Will record a liability if we are required to restore the work. The factors suggesting exploration and evolution assets should be tested for impairment. And when we are testing them for impairment, we'll be comparing the carrying amount with the recoverable amount. This principle will be taken from IAS 36 impairment of assets. So they do not need to give a different impairment model for IFRS 6. So we can refer to the principle of testing of impairment, that is comparing carrying amount with recoverable amount. Period for which entity has right to explore has expired or is expected to expire will result in trigger for impairment. Substantive expenditure on further exploration and evolution activities specific area is neither budgeted or planned. They are not included as part of their previous cost, so which may result in losses. Exploration in specific area has not led to discovery of commercially viable quantities of mineral resources. What they were expecting has not reached a fruitful conclusion. So whatever cost they have incurred may turn out to be expenses in the form of impairment. Or sufficient data to indicate that the carrying amount of exploration evolution asset is unlikely to be recovered. So if there is a substantive data which proves that they will not be able to recover what they have incurred in the form of E&E asset, and they have capitalized that E&E asset, if it is not recoverable, they need to amortize it and charge impairment, show losses in P&L account. So we need to disclose and then need to disclose information, explain the amount recognized as E&E assets in the financial statements. When did they begin capitalization? When have they ceased capitalization? When it has formed part of IAS 1638, they need to disclose all the information. They include accounting policies for exploration and evolution expenditures, including recognition of E&E assets. When did they begin it? Amount of assets, liabilities, income and expense, and operating and investing cash flows arising from E&E is also to be shown depending on to which statement they belong to, whether it is financial statement, P&L, cash flow statement, and all the disclosures relating to it. So this is all for IFRS 6, exploration for and evolution of mineral resources. Though this finishes in one line, it is an extension standard. So what you need to bifurcate is, or you need to analyze is, the day you get the right to explore, you are eligible for capitalization. Any expenditure incurred before right to explore, like the land, acquisition of land, was not belonging to the period they got the right to explore. It was a pre-exploration period, and any admin cost related to that is also expensed off. So the trigger point is the right to explore is the word to keep in mind for determining the cost eligible for capitalization. So this is all for IFRS 6, exploration for and evolution of mineral resources.